Welcome back to Switzer. It seems near record low mortgage rates are doing little to revive Australia's housing market. The latest housing finance data reveals demand for loans is still lacklustre. So what does this mean for the housing market and the rest of 2013? For more, we're joined by John Edwards, the CEO of Residex. John, thanks for joining us.
Yeah, my pleasure.
Now, there's a very sexy part of this interview where you actually tell us a great place for investors to go to, but we'll save that to the very end. You were saying to me in the break that you think the Reserve Bank is looking at the wrong things, and you've got a chart that proves it. So if we ask our guys to dig that chart out while we're talking.
Yes, it's the sales chart I want everybody to have a look at.
Yep.
There is too much focus because I think historically we've been focused very strongly on capital growth.
Yep.
But the real issue that we ought to be focused on is actually the volume of sales that are going on. Because if you don't have a lift in sales, you don't have a lift in activity. And if you've got no activity, the real estate agent's not earning his buck, the lender's not earning his buck, the renovators aren't earning their buck, the builders aren't earning their buck, and so it doesn't flow through the economy.
Well, there's your chart there, John. What's the straight line going through it?
The straight line is where we're at now,
right,
and allowing you to look at where that was historically.
And so when you've got that bit of a dip under the line, what time frame are we talking about? We can't pick.
We've got a couple of about a year that dip under the line.
Yeah.
But you can see that not since about 1998, 1999 did we have sales at the level that we've currently got them at.
And this whole chart is all about sales.
Absolutely.
And you're saying the Reserve Bank is probably a little bit worried about maybe a price bubble, house prices, but you're saying the reality is for the economy is that there's not enough sales going on.
Absolutely.
And that would be your argument that we probably need another rate cut.
And we need a rate rise soon.
Rate rise?
I mean a rate reduction. we need that. We need sales to rise and rise strongly.
Yeah.
The risk of actually house prices getting out of growth, and we come and have a look at the house price growth in our data in a moment, and we can get up housing and unit while we're speaking.
Yeah.
What you can see is that there is some growth, but affordability is such that the growth is being kept under control.
So here they are there, John. So we've got like ACT is minus 2.5%. Darwin's killing them because whatever's going on there is not Australian.
It's the gas
the rest of the countries is either negative or very low growth rate.
Yeah, and Peter, how many times have you heard in recent days that the housing market is doing well or growing strongly?
Yes.
Well,
I've heard it plenty of times. But you're saying...
no, it is better than it was.
Yeah.
It's better than it was, but it's actually going backwards in real terms.
Yeah.
I mean, in the last 12 months...
Because they're only nominal figures,
They're nominal, and that's what...
Putting inflation, it's no real growth.
People aren't really talking about it and they're focusing on the right thing. The Reserve Bank does have to do something about interest rates.
OK, next chart.
We have a look at the unit market now, and you can see again, we don't have growth that is not real.
Apart from Perth. Perth's doing OK.
Exactly.
OK.
And so
point proved. Let's go and look at the rent situation.
OK. Now, this happens when there is demand in the market and not enough supply.
Yeah.
And so what you've got is...
Good time for landlords, looks like, on those figures.
Absolutely. If you're a landlord, this is a low-risk period, and you all ought to be out there investing. And in fact, it's the...
Of course, that's not financial advice. This is brilliant personal investment education, John.
All right, I'm sorry. But the bottom line is that we are in a period where, in fact, the risks of owning residential property are going down because the cash flow is improving. Unless
you're doing a self-managed super fund and the government changes the rules. That could be a little bit of...
Well...
But we'll talk about that in a moment. OK, so let's go to the next aspect.
And now we've got the units. And so you can see, if you look at those two charts, you look at them, what we saw was the rents were rising across the whole markets, but the unit market is actually doing best.
So if I'm someone who hasn't been a landlord before and I'm thinking about doing it, is the unit market the place to be for a first upper?
It is, as long as you are careful in your selection.
Yeah, get the right area where tenants want to live.
Yeah, and not only that, where you aren't going to get oversupply. You've got to look at the areas where the infill has already happened. Yeah. Don't go to areas which are going to get infilled. So you look for the position and the infill has already happened. OK,
now, I know you recently identified a place in Melbourne, and before we name the area, let's keep the drama going. We know that Melbourne did have an oversupply.
And it still has.
It still has an oversupply, yet you still think Port Melbourne is a good place for landlords?
Yeah, I mean, the bottom line is that Port...
It's a great spot.
Absolutely. And we're at position in many respects again.
Yes.
You're on the edge of the water.
Yep.
The infill has happened. Industry is coming to the area.
Yeah.
About
Close
3
to
years
CBD,
ago.
really.
Yeah, the tram line is right there. It's an absolutely beautiful, picturesque spot.
Yeah.
St Kilda around the corner, the Bayside right on your dock. It's changed. It's been renovated, or if you like, or rejuvenated. It's come out of an industrial area to being a residential. The development has predominantly gone on. Still more will go on, but the position and the aspect is such that it's very difficult for it not to actually do fairly well. But again, you've got to be careful about the price. You don't want to get carried away and not think about getting value for money when you go and buy there.
Okay. Houses opposed to apartments, are they still good value? They haven't been doing as well, but is there a potential catch-up for houses?
Are we talking about Port of Melbourne?
Oh, no, any area that you think is good for landlords.
All right. I think that, again, as long as we stay within shooting distance of the median value for suburbs, and the other important point is, and I'm about to release this in the Residex reports, the median income level. As long as that suburb is affordable at a median price range and the median price range isn't too high, then I think the house and land market will do better than the unit market because of supply issues. But just be careful in all of that too, because if you go and buy units in an area where there's plenty of land around, you're going to get yourself into trouble. And equally, if nobody wants to live at the beach on a block of dirt and look after the land, the unit will do better than the house. So it's horses for courses and common sense all the time about what you actually do.
John, we've seen that there have been some really strong auction clearance figures in the Sunday paper.
Have they?
No,
Have
well,
they?
please wait. We've heard reference to them.
See,
what's the reality? What's the reality?
Okay,
I asked the question because you often have a reality view on this.
Yeah. I think that there is too much industry talking the housing market up at the moment for their own commercial benefit.
Really?
And in all of that, and in all of that, what we're doing is we're not allowing the Reserve Bank and others to really come to grips with where we're at. And that's why I'm saying what I'm saying, because at the end of the day, we are not where we need to be. Those clearance rates are very poor clearance rates. You and I, when we were talking about markets doing reasonably well, we talked about clearance rates of 75 and up. We've got the market now, because it got to 50% clearance rates, looking at 60s and say, how fantastic. The bottom line is that's not really very good. It's better than it was, and it's better than it was last year. But I want very much to see this housing market move forward. I don't think there's a risk of us getting bubbles. I don't think there's a risk of us actually having a bust or high price rise. Affordability is going to control it this time round.
One last one. We only have about a minute left. The government's proposals to change the capital gains inside self-managed super fund, is that going to hurt the demand for property, do you think?
We were just starting to see an increase in investor activity coming out of superannuation into residential property. And every time, you don't make rules for something and constantly change it. And if I looked at this government, I would have to say that this is a government that has done more to destroy the credibility of Australia in financial markets than any government that I can remember in living memory. Don't muck around with a super fund.
All right, buddy. Thanks for joining us on the program. That's the show, but before we go with all these super changes talk around at the moment, a question you might have is, should your self-managed super fund invest in property? My newsletter, the Switzer Super Report, has all the answers in our 5-week property special. And you can sign up. There's a free 21-day trial. Have a look at it. And there's also insights from our expert team. I'm Peter Switzer. Thanks for watching. I'll see you tomorrow night.